All right, really quick, we'll break down. I'll give you guys a quick breakdown of pound USD. I was actually I was in this trade today, and as you as you guys can see, I was targeting this previous day's low. All right, and everything was perfect. So thought process behind this is we look right here, we have this volume imbalance. All right. Now from a 1 hour chart coming into the day, I was thinking that we were actually seeing that buy program, right? And that we're going to run this level. And honestly, I actually like what we're doing at this point. We're liquidating that previous day's low. We may even get a Wednesday low of week. All right. But anyways, we're in that volume imbalance. We have news at 8:30. News gives an expansion lower, and we start invalidating discount arrays. Right. And we trade right inside of this rejection block. Okay, so at this point, I'm thinking New York OTE from New York's very own range. All right. If we take this high to this low, all right, this is going to be OTE in here. All right, and my entry comes within this area in here. So 1 minute chart. Obviously, we have this range, and then we have price coming back up. We have this short-term high, which was created here, right? And also, if we look over here to the left, just want to point this out. This would be a breaker, right? And this breaker literally holds price even on this next run. All right, so here's the range. We come back, we have short-term high, right? We're not induced by that short-term high. Price runs up, stalls just below the short-term high, right? All of this is inducement. And then we get the intermediate term high, all right? All right, so short-term here, intermediate, short-term, okay? Now, when it comes to entry model, I'm looking for this imbalance to be negated. I'm looking for the low of that candle to be traded through, right? And then all of this is the buy side delivery back up. And I'm simply just looking for price to trade through that area, right? So take entries here, literally at this very moment. All right, I did scale in once more as price traded back up into this area. So this trade is somewhat similar to this. And I was anticipating a run down to this 0.5 standard deviation, which, we're almost to that level. All right. So we get the expansion through the equal lows, and then now price is running back higher. Okay. So now watch this delivery here. All right. Because this is nothing but a market maker sale program. All right. Now price runs up. So this would be, in terms of market maker sale program, this would be the current market price. The array would be that breaker, and then also this buy side liquidity pool. All right, so you have market price, you have array, and then obviously the terminus is that previous day low, which comes in at 30509, which we've already run that level. All right, I think, let's see. Yeah, previous day's low. Exactly, yeah. All right, cool. Maybe I was taking deviations from. I was a bit confused about the deviations, but anyways, we see price running back higher, right? We know that this is a market maker, so we don't know if it's a market maker sale program, but anyways, I just see price running higher. All right, we take out this buy side liquidity pool. Once we take out that buy side liquidity pool, here's the key point: when price runs out buy or sell side liquidity, and remember me saying if this is a high and there's an immediate rebalance, right? It's more characteristic of an opposing stop line. All right. Now, inside of that immediate rebalance, what you should be looking for are rejection blocks, right? Price exits a range, but then forms rejection blocks, right? That adds to the idea, right? That's probably going to be an opposing stop. Okay, it's just it's a response, all right? So anyways, let's look at a 5-minute chart. On the 5-minute chart, here we are. Now, what I'm seeing is down close candle, right? And then we take out these highs. 5-minute rejection block forms, price is running lower. Even if the entry model form in here, I wouldn't take it because we've swept a low and down close candles are supporting price. All right. But very first moment that we take out that down close candle, which is a discount array, now I can check this response. All right. Because we're trading back up into an up close candle, right? An order block. Okay. So what we're going to do is we're going to go down into this area and we're going to read the delivery. Now, I did not take this trade. At this point, this is outside of the scope of the time that I'm wanting to trade. Now, it doesn't mean that there aren't times where I'll bend rules. This is honestly a scenario where I would bend that rule. All right. I was just thinking that maybe price was going to hold off on running that previous day low. Maybe we would hold until tomorrow because I was beginning to see this as just a range. I didn't see any need for price to run back up into this area because everything was efficiently delivered here, you know. But anyways, once we run out this 5-minute down close candle, you can see price comes back up inside of the range, right? This blue shaded area, remember that blue shaded area is the volume imbalance on the daily time frame. Okay. We take out buy side liquidity pool. After that, we're locating the imbalance within the stop point leg, right? So short-term highs here, intermediate term highs here, right? That's the imbalance within the stop point leg, EFD, order block validation, right? This is delivery retesting the OB. Your entry would literally come here, stops would come here, right? So I don't know what the RR on that trade would have been, but maybe 1 to 4, maybe. I would have taken profit here. So almost a 1 to 4, well, 1 to 4.5, almost 1 to 5. Actually, yeah, let me see. Yeah, this is I'd say this is textbook. Maybe I'm saying that in hindsight, but it's good to just understand the delivery that way. You know, this would have been a original consolidation. It's not really a consolidation. Maybe on a lower time frame if you look into here. This would be your smart money reversal, right? You had low risk sales in here, and then this is that second stage redistribution. All right. And if you think about the second stage redistribution, right? Why the ICT charter model 6 and 7, he speaks about, he basically goes over that model, right? Which is entering from that second stage of reaccumulation or redistribution. If you think about that, that is the point in which the opposing order flow on the opposite side of price, those discount arrays have been taken out, right? And at this point, it's like very obvious what the order flow is at the current moment. So you guys can go and, if you want to go and look at that or study that, you can. But I just want to give you a breakdown about today's trade on GU.